Okay, so there is a massive financial shift happening right now, and it's being led by the youngest generation of investors. Seriously, they're making a bet that could totally redefine retirement, for better or for worse. Let's break down why this is all going down and what it really means for the future of our money.
And just a quick heads up before we dive in, this is all for educational purposes. It's not financial advice. All right, let's go.
So, it all starts with this one kind of stunning number. Get this, members of Gen Z are 4 times more likely to own cryptocurrency than they are to have a traditional retirement account, like a 401k or an IRA. That isn't just a small trend, you guys. That is a seismic shift. And this slide, wow, it really puts that gap into perspective. According to YouGov data, a staggering 42% of Gen Z owns crypto. Now compare that to just 11% who have a 401k or an IRA. It's a huge, huge preference for digital assets over the retirement bedrock that our parents and grandparents relied on. Well, as you can imagine, this has created a massive debate. On one side, you've got financial experts just sounding the alarm, calling this whole approach incredibly dangerous. But on the other side, you've got a major political push, with the Trump administration actively working to allow, even encourage, crypto inside those very same 401ks. So what is going on here? To really understand this, we first need to dig into the data, because this isn't just a Gen Z thing. It's really the peak of a financial divide that's been growing for years. And this table right here, it illustrates that divide perfectly. I mean, just look. Start with the boomers. 65% have a retirement account, only 8% on crypto. Pretty traditional. Now watch what happens as we move down the generations. For Gen X, it gets a little closer. For millennials, it actually flips. More crypto than retirement accounts. And then you get to Gen Z, and it's not even a contest. The traditional model has been completely turned on its head. So the big question is why? Why is this happening? Well, there are some really powerful forces at play here. A lot of Gen Z folks are in the gig economy, so they don't even get offered an employer-sponsored 401k. They're also dealing with crushing levels of student debt, which makes saving for 40 years from now feel kind of impossible. And remember, they grew up in the shadow of the 2008 financial crisis, so there's this deep, deep distrust of the big banks. And crypto, well, it's easy, it's 24/7, and you can get started with $10. No boss needed. But this goes way deeper than just how easy it is to use an app. For a lot of young investors, choosing crypto isn't just a financial decision. It's really about adopting a fundamentally different worldview. This sentiment right here just captures that feeling perfectly. Think about it. Gen Z watched their parents follow all the rules, do everything right, and still get absolutely crushed by the 2008 crash. The banks got bailed out, but regular people lost their savings. So from that perspective, trusting decentralized code can feel a whole lot more rational than trusting Wall Street. And where they're getting their information from is just as important. It's not from some stuffy office with a guy in a suit. It's coming from social media, from a whole new class of financial influencers, or finfluencers, on platforms like TikTok, YouTube, and Instagram. A study from the CFA Institute actually breaks down their motivations. So the number one driver? The ability to start with just small amounts of money. Right behind that is just simple curiosity. But look at number 5, FOMO. The fear of missing out. Over 40% of Gen Z investors say FOMO is a major factor. That's a really powerful emotion, and it's amplified like crazy by social media, which is always asking, why would you settle for 8% a year when you could get 40%? Okay, so now let's pivot to the other side of this whole debate. While Gen Z sees all this opportunity, a lot of financial professionals see a 5-alarm fire. And their warnings, well, they're backed by some pretty sobering numbers. So here's the core of the issue. Yeah, sure, Bitcoin's 10-year return has been absolutely astronomical compared to the S&P 500. But the part you cannot ignore is the volatility. Studies show Bitcoin is 4 to 5 times more volatile. For a long-term retirement strategy, that level of risk can be totally catastrophic. One major crash at the wrong time could literally wipe out decades of your savings. And this right here, this might be the most concerning statistic of all. A nationwide survey found that only 19% of Gen Z investors say they actually understand how compounding interest works. Compounding is the engine of building long-term wealth. This is made even worse by recency bias. A lot of young investors have only really known bull markets, so even that devastating 2022 crypto crash didn't scare them off for very long. Let's build on that by putting these two systems side by side.
A 401k comes with layers of protection. It's regulated, it's often insured, and it comes with an employer match, which is literally free money. Crypto has none of that. It's mostly unregulated, and if your assets are lost to a hack, a scam, or you just forget your password, they are probably gone forever.
And a 401k has one more crucial protection: fiduciary duty. This is a legal requirement that forces the people managing the plan to act in your best interest. It's kind of like having a designated driver for your life savings. In the world of crypto, you're driving all on your own, and there are no guardrails.
So we've got this massive clash, right? A younger generation diving headfirst into a high-risk world, and experts screaming at them to get out of the water. But then the government stepped in and completely changed the game.
We've seen a dizzying amount of policy whiplash on this. Back in 2020, the first Trump administration started cracking the door open to alternative assets. The Biden administration came in and pulled back, urging caution. But in 2025, the Trump Department of Labor rescinded that caution and then followed up with an executive order specifically designed to democratize access and remove hurdles for putting things like crypto into 401ks. So where does all this leave us? Well, a recent Fortune study found something really interesting. Gen Z investors who have both a 401k and crypto actually perform the best. This has led to this new consensus emerging among financial planners. It's not about choosing or, it's about a strategy built on and. So the playbook kind of looks like this. First, no matter what, get your employer match in your 401k. It's an instant, guaranteed return you just can't get anywhere else. Don't leave free money on the table. Second, focus on maxing out your traditional tax-advantaged accounts. And then, and only then, think about allocating a small, responsible slice of your portfolio, money you can truly afford to lose, to higher-risk assets like crypto. So I think this is the crucial point here. It's really easy to just dismiss Gen Z's financial choices as reckless or uninformed. But that totally misses the bigger picture. This isn't necessarily about a lack of intelligence. It's a different calculation of risk and reward, made by a generation that grew up watching the old system buckle under pressure. Which leaves us with a final, really provocative question for the future. Is retirement no longer just about slow and steady saving? Is it evolving into more of a hybrid strategy, where a small, calculated bet on high-risk, high-reward assets becomes a standard part of every single disciplined portfolio?